Welcome to Sterling Insights, Stand Out and Supercharge Your Assets, the go-to podcast for financial advisors aiming to grow their assets under management, stand out in a crowded market, and retain assets nearly forever. Are you advising high net worth clients who own appreciated capital assets? Do you want to help them sell without losing a quarter, a third, or even more of their hard-earned profits to capital gains taxes? Then this podcast is tailored for you. Each episode brings you the latest strategies and expert advice from leading financial advisors, seasoned attorneys, and experienced CPAs. Learn how to maximize your clients' wealth, minimize their taxes, and supercharge your advisory practice with actionable insights. Join us on Sterling Insights, Stand Out and Supercharge Your Assets, where you'll gain the knowledge and tools to set yourself apart and achieve unparalleled success in wealth management. Subscribe now and empower your practice for a brighter, more prosperous future.
Welcome to Sterling Insights Supercharge Your Assets podcast. This is Charles Trakas, guest host here with David Wiener, CEO of Cash Flow Strategies, and named one of the top 5 cost segregation experts in the United States. Congratulations, David.
Thanks.
I've known you for quite some time as Mr. Cash Flow.
Yeah, that was a nickname that was given to me by one of my clients years ago. And I said, do you mind if I use that? And he said, I don't know, do I get a commission? And I said, no. And he said, I don't care, go ahead. And I've been Mr. Cash Flow to a lot of my clients ever since.
So let's talk about that. How did you get into the industry? Talk a little bit about your cash flow strategies.
Well, it started kind of as in a roundabout way. I started out running a medical practice and ran a medical practice for 9 years and also a medical billing service, and then decided that I was going to jump from the frying pan into the fire and become a consultant. And so I began doing consulting work with medical and dental practices, and have done that off and on ever since 1989. A number of years ago, probably 15 years ago, a bunch of my clients were coming to me saying, I can't see any more patients than I'm seeing, but I'm not making money anymore. What do I do? So we began to dig into that a little bit. Once I realized that their problem wasn't revenue. They had plenty of revenue. Their problem was cash flow, and they didn't understand it. They were making all kinds of money. They just didn't have it when they needed it, when it came down to payroll and those kinds of things. So I began to center my consulting practice around cash flow. And I knew a lot of people. And so I would refer the doctors to this person who could handle certain things for them and this person who could handle certain things for them, all dealing with their cash flow. I don't know if you've ever worked with doctors and dentists before, but God love them. They're just not the world's best business people. And, so I would refer them to somebody. And the next month when I talked to them, I said, did you ever talk to so-and-so? And they said, nah, they never called me back, or nah, I never got around to it, or whatever. And after doing that for a while, I realized, you know what, I could probably become all of these people for them. So that all they have to do is talk to me. And so I took 2 years and I vetted the best of the best companies in all kinds of areas that deal with their cash flow, collections. I signed independent contractor agreements with about 8 or 9 different companies, and Cash Flow Strategies was born, my company. And it was basically just me, but I was actually working as an agent for a bunch of different things. So they could just come to me, tell me what was going on. I could help diagnose their problem. I could get them into the right fit for whatever it was that helped them. That was great for a while until I ran into a dental client of mine who said, hey, I'm buying a standalone bank branch and putting my practice in it. Is there anything we can do to save taxes? And I said, maybe. I was familiar with cost segregation, but I didn't know a whole lot about it. So I began to dig in and decided to get involved in cost segregation. And I signed an agreement with a company called CSSI, which is the oldest and the largest provider of engineering-based cost segregation in the US. Really the only one that I thought was a good fit for who I am and who my clients were, and began to really study the tax benefits that are available to these doctors and dentists. I started hearing from real estate investors and commercial real estate owners and all those kinds of things, and got requests to speak. Well, I love to speak. Most people are afraid of death or public speaking. Death you can keep, but public speaking is one of my favorite things to do. I have the heart of a teacher. And so I had the opportunity to start traveling around the country and teaching people on cost segregation. And I found out that a lot of people aren't familiar with it. And gradually over the years, built my cost segregation business wing of cash flow strategies into a very, very good business. And like I said, recently was named by a real estate publication as one of the top 5 cost segregation experts in the United States, which I was very flattered. There are a lot of good people doing cost segregation. I think we're the best.
Okay, what does that mean to you?
It's just, it's validation for what I'm doing and the fact that people can actually listen to me and know that they're going to get the straight scoop from me about cost segregation. There is so much misinformation that's out there. I had one tax professional tell their client that cost segregation was a scam. It's not. It's one of the best tax strategies out there for real estate investors. So I've learned to start quashing some of these myths and really educating people on it. I did a real estate investors conference in Las Vegas a number of years ago with one of the big leaders in real estate. I had a room of 350 of what he called his MVP and VIP real estate investors. And I started out by saying, how many of you guys are familiar with cost segregation? There were less than 2 dozen out of 350 people in that room who raised their hand. And I said, well, how many of you have ever done cost segregation? And 6 raised their hand. They were all my clients. And one guy in the back stood up and said, we've done 21 properties. I haven't paid any taxes in years, and I don't plan on paying any going forward. And everybody kind of turned around and looked, And so you just never know. I never assume people understand what they have there as far as, tax benefits for real estate. I always start from the very beginning and teach.
So, as a real estate investor, your ideal client, it kind of sounded like it was dentists, doctors, and have you transformed more into the real estate investor?
The real estate investors and the real estate owners are the biggest part of my business now. I still do consulting with, I think now it's still over about 300 medical and dental practices across the country. So I stay busy.
Oh, I can imagine. I can imagine. One of the biggest questions I always ask is some of the common issues that you help them with, besides
What?
cost segregation. I mean, cost segregation is a great engineered program that provides a great, like, upfront amortization of a
Yeah.
property. And explain that real quick, because a lot of people don't know what cost segregation is.
Instead of depreciating your property for 39 years, straight line, or 27 and a half, depending on the type of property,
Right.
a cost segregation study comes in and finds all of the property that can be depreciated at 5 years, which is anything non-structural inside the property, 7 years, which is furniture and fixtures, or 15 years, which is land improvements. All of those can be depreciated much quicker. And so we isolate all of those items and lay it all out so that they can depreciate them on their actual lives rather than the easy way, doing it as one. I always used to tell people, if you remember the old McDonald's commercial for the Big Mac, you either have a Big Mac or you have 2 all beef patties, special sauce, lettuce, cheese, pickles, onions on a sesame seed bun. Well, that's what we do with your building. We tear it down into all its component pieces and put them in the right depreciation categories. If you
Yep.
depreciate something over a shorter period of time, by necessity, your tax deduction goes up. And then on top of that, starting in 2017, we got bonus depreciation. Doesn't mean they get any extra depreciation, but what it means is you can take a certain percentage of that, all that shorter life property, the very first year. And when the Tax Cuts and Jobs Act passed in 2017, we had 100% bonus depreciation all the way through the end of 22. And then it started to decrease because of the way the bill was passed. And thanks to the big, beautiful bill, it's now back. 100% bonus is back, and this time it's permanent.
Let's talk about the big beautiful bill. What
Yes.
options, what opportunities have you seen and are seeing in the future that are going to be good for this?
100% bonus depreciation is the best thing that's happened. I mean, it started in 2017, and that's not the first time we had bonus depreciation. It's the first time I know we had 100% bonus. But the whole idea of doing it that way was to spur investment in real estate, and it absolutely worked. And the economy benefited as a result of it. It's an encouragement to people to invest in buy and hold real estate. And I'm sure we will be seeing now, if the Fed would reduce the interest rates just a little bit, we'd see an even bigger boom in real estate. And I think it's coming, but they're being cautious. We also handle research and development tax credits. We also handle the 179D, which is the commercial building, energy efficient commercial building tax deductions, which unfortunately on the downside, the big beautiful bill has put an end to, but not until the middle of 2026. So any properties built before then, we can still look at for some major deductions for energy efficiency, and where cost segregation deals with all the non-structural parts, that 179D on a commercial property or a residential property over 4 stories, that handles all the structural parts, the building envelope and the heating and air and the plumbing and the lighting and all that kind of stuff. So just another big, beautiful tax deduction for people.
Yes, and a lot of people are unaware that it includes the insides and everything of the building.
Yeah.
But here's a question. You mentioned R&D, research and development. What that is big as well as cost segregation. My understanding, there's a lot more companies are going to be able to take advantage of it.
Well, they'll be able to take advantage of it. And also it's immediate expensing because of the big, beautiful bill. Before it had to be amortized and that kind of thing. Now it's back to immediate expensing. So you can get those credits right away in full. And a lot of people don't realize they do research and development. You know, if you're testing new ideas, testing new products, looking for better ways of doing things, all those kinds of things, that's research and development. And as long as it's measurable and you can quantify it and, you know, that sort of thing, you could very well be eligible for, and that's a tax credit. So, you know, that's not a tax deduction, that's a tax credit, which is even better, I think.
Yeah, about 10 years ago or whatever, when it came out, yes, I tried to do it with a couple of clients of mine. Unfortunately, it didn't work for certain ones like IT companies, but now I think that they're in that realm
Yep.
of now they're considered research and development, which I kind of thought they always were. So I think it's opening up the opportunity, for a lot more.
And the nice thing is if somebody doesn't know if they qualify, all they have to do is call me. We'll take a look at their business and we will let them know if they qualify for an R&D tax credit. For any of this stuff, we do free estimates anyway on what the study would cost and then what we think your benefit would be.
What are some common misconceptions about cost segregation, bonus depreciation, R&D? I know that there's some common misconceptions out there.
Yeah, mostly cost segregation is what I run into. And some of the biggest misconceptions are, I can't do it, it's not commercial property. I've had CPAs tell me that. Well, it doesn't have to be commercial property. All it has to be is income generating property. So rental residential property. You could have one small single family home that you rent out, and it still could be very possibly a good advantage. But we can do properties with a cost basis of $150,000 and up. And some people say, I can't do it because it's under $1 million. No, we can do 150,000 and up and make it worth your while to do a cost segregation study. The $1 million was a limit years and years ago. Companies wouldn't look at properties under $1 million. I've had people say, oh, my CPA handles all that. No, they don't.
No.
They can't.
Yeah,
They can take a swing at it. In fact, we did a study a couple of years ago and found that if you take the same property and a cost segregation study is attempted by a CPA and a cost segregation study is done by us, we're going to get about 22% more tax benefit than the CPA will find.
And that's very strong. And I agree with you because I was down that path before.
Yeah.
It is a in-depth engineering test that
if you're smart, it is.
They don't have the resources for the most part.
Exactly. There are different methods of doing cost segregation. There's only one that's recommended by the IRS. The only one that I would ever do is engineering-based cost segregation based on documentation.
Right.
It is 100% sure. It is 100% bulletproof. We've done over 50,000 studies across the United States, and we have never triggered an audit. So
that's strong. Very
that's strong.
And it's kind of funny, it was leading into my next question. I was going to say, tell me something of something going wrong.
Well, in the handful of times that someone is audited on something else and the study's called into question, we will defend it at no charge to them for as long as it takes. And we've never had a change with the IRS. I've had a few of my studies involved in an audit, and the CPAs involved were real familiar with us and used us quite a bit, had no anxiety about the audit covering the cost seg study. They just kind of gave it to us and we handled it with the IRS and we didn't have any changes and that sort of thing. But I've also heard people say, I don't want to have to go back and refile all those tax returns, or I can't do it because I didn't buy it this year. Well, we can go back 15 years, and that's generally about the limit as to where it's effective. And you don't have to refile any tax returns. All it requires is a Form 3115, which is an IRS change of accounting methods form. We'll even fill it out for the CPA, so all they have to do is sign it, because it's a pain to do, from what I understand from my CPA friends.
Right, right. So CSI, or was it CSI? Is that the name of the company?
CSSI.
They do the engineering testing
Right.
for you. Okay.
Right.
And that, yeah, because they've been around for quite some time. Let me ask you this. What is your biggest challenge?
My biggest challenge as far as cost segregation goes is misinformation. I'm fighting against misinformation all the time. There are other ways of doing cost segregation study, not one that I would ever recommend, but there are now DIY cost segregation studies where you can go on a website, plug a few figures in, and get a report spit out. It's a lot cheaper. I got a call from one of my clients down in Florida, and he said he was arguing with me over the price of the study. And we're not the most expensive either, but he said, well, I had a friend who did 6 properties and got them all for about $1,000 each. And I said, he did a DIY study, didn't he? And he said, yeah, I think he did. I said, well, I wouldn't recommend doing that. He called me back the next year when we were doing some more properties for him. And he said, you know that friend of mine I told you about? I just gave him your name and number. He was audited, and his taxes and interest were far more than any study you were quoting.
Ouch.
He got hammered.
The old saying, you get what you pay for.
Well, I liken it to, if you were going out looking for a brain surgeon, you wouldn't go price shopping. And dealing with the IRS is at least as painful as brain surgery. So,
and especially when you're doing a cost segregation and writing up a couple 100,000 to a million,
yeah.
don't you think, red flags going to come up on that? Yeah, I can imagine. That's a good story. Great story. So what do you like best about cash flow strategies?
It fits me really well because I'm a helper. I like to help people out. I have doctors and dentists that have been paying, it's required that every year they have a HIPAA risk assessment for privacy of data and all that kind of stuff. And they're paying all kinds of money to get that HIPAA risk assessment done. I can get it for them for free. Well, I like being able to ride in on the white horse. And, I also like to get on a Zoom call with somebody and show them their cost segregation estimate and say, okay, look, this is going to cost you $3,500. Your tax benefit is somewhere in the vicinity of 100,000.
Yeah, who doesn't want to hear it? Yeah, I was going to ask you, give me an example. Say, I just bought a whatever, $2 million.
I'll give you my poster child story.
Okay.
I got a call from a guy who owns a flight school in Nevada, right outside of Las Vegas. And he said, I'm not going to do a cost segregation study on this thing. They're way too expensive. And I said, well, what do you mean they're too expensive? And he said, oh, I was being quoted like $19,000, $20,000 for a cost segregation study on this thing. And I said, send me this information and let me run an estimate for you and see what we can do. They said, so he sent me the information. I got him the estimate. It was going to cost him about $12,000. And we were estimating that we were going to save him $1 million. But that's not even the best part of the story. So he went ahead and he said, okay, for that, I'll do it. By the time the study was all done, we saved him over $2 million. And the price did not go up.
That's a great story.
I think if I ever want flying lessons, I could probably get them for free now.
I wouldn't mind getting my pilot's license. Fly helicopters. Great story. So the best way to find out about more stories with David Wiener is, where can we find you?
You can find me at costsegregation.info. It'll take you to my website, or people can just call me. I talk on the phone all day. I love to do it. So if I can give out my phone number, I'll be happy to do that. It's
Yep.
770-224-8504. You can call or
Perfect.
text on that number, and I will be thrilled to talk with you and answer questions and get you a free estimate if you want.
Do you have a website?
I do. It's the costsegregation.info will take you to one website that's specifically about cost segregation, or you can go to cashflowstrategies.us, and that'll be kind of the whole scope of the business.
Perfect. Great. David, I want to thank you and everyone for watching or listening to the Sterling Insight Supercharge Your Assets podcast. Have a great day.
And I tell people, it's your money. Keep more of it.
Perfect.
Thank you for listening to another episode of Sterling Insights, Stand Out and Supercharge Your Assets, where we provide the info you need from successful leading financial advisors, lawyers, and CPAs. Your hosts, Roger and Catherine Silk, invite you to learn more about Sterling Foundation Management by visiting sterlingfoundations.com.